If you invest in real estate, you have access to one of the most favorable provisions in the entire tax code, and most physicians have no idea that it exists. I'm Dr. Taxter. Let's get into it. It's called Section 1231, and it gives real estate investors something most tax provisions never offer: asymmetric tax treatment. Here's what that means. Section 1231 is like a drug that gives you the therapeutic benefit without the side effect profile. So when you sell your rental at a gain, you get the lower capital gains rate. You sell at a loss, you get the higher ordinary deduction. All benefit, no trade-off. Here's how it works. If you hold a business use asset like a rental property for more than 1 year, it can qualify as a 1231 asset. When you sell at a gain, the net 1231 gain can receive long-term capital gains treatment instead of ordinary income treatment. But with the real estate, there's a catch. Depreciation-related gain may be taxed first through depreciation recapture or unrecaptured Section 1250 gain, which can be taxed at up to 25% before the remaining gain receives the preferential long-term capital gains rate of 0, 15, or 20%. Now, here's where it gets powerful. When you sell at a loss, a net 1231 loss can be treated as an ordinary loss, not a capital loss. That matters because ordinary losses are often more valuable than capital losses and may be able to offset W-2 income, practice income, or high tax dollars. So the concept is this: gains may go out at capital gains rate. Losses may come in as ordinary losses. That's the asymmetry. When you win, potentially lighter tax. When you lose, potentially heavier deduction. But one more rule that matters. If you had net 1231 losses in the past 5 years, current 1231 gains can be pulled back into ordinary income to the extent of those prior unrecaptured losses. That's called the unrecaptured Section 1231 loss rule. It's a little bit complicated, but you gotta know it before you sell. So certainly, the tax code is biased towards business asset. And it also rewards the physician who find the asymmetric advantages and use them correctly. I'm Dr. Taxter. Follow for your daily tax codes because a healthy income deserves a healthy tax plan.